In September 2025, the National Bank of Rwanda convened a high-level Q&A session bringing together members of the media, commercial and investment banks, and key leaders from both the public and private sectors. The event offered a rare opportunity for open dialogue with the governor of the National Bank of Rwanda, Soraya Hakuzia-Remie, alongside the bank's chief economist, Thierry Kalisa, and Nick Barege, Deputy Governor, National Bank of Rwanda, as they unpacked the country's monetary policy direction and financial stability outlook. We now bring you this special session here on CNBC Africa.
Governor, since the Masters of Ceremonies, I'll take the advantage of asking maybe the first two questions that came in. How concerning is the rise in fraud cases affecting digital transactions, and what steps are being taken to address this issue?
It's true that there's mentioned one of the risks that we are monitoring is fraud risks in the financial sector, which is to be expected with the fast pace of digitization and use of digital means of payments, but also digital financial services. We've put in place a few measures. The main one at the central bank was to put in place what we call the Financial Sector Security Operations Center, which consolidates all information regarding any cyber threat or potential cyber attacks in our banking microfinance sector, and we will extend it to insurance sector. And working with the National Cybersecurity Agency, that allows us to detect in real time any cyber threat that would come in our system, be able to also respond immediately in case of potential attack. But it was important to also conduct various and trainings broadly in terms of cybersecurity. Second is to look at AI-powered tools to prevent frauds, which we are now working with some of the central banks that we partner with, especially in Asia, to be able to roll out some of those fraud prevention tools. And some of our banks actually have those tools in place. And lastly is the collaborative efforts by different institutions, central bank, RURA, law enforcement authorities. You've seen an awareness campaign that's ongoing, Vima Matri, to make sure that there's education, financial education, and digital literacy to ensure that people don't fall prey to fraud. And this campaign will continue throughout the year. But this will be a continuous effort. It cannot only be financial sector or the financial sector regulator only. It has to be all concerned stakeholders really taking this risk as a risk that we will continue to see as we promote digitization of our financial services.
Yes.
Yes, my name is Kevin Karobia from BK Capital, and my question will be directed to the chief economist at Pinecofin. So historically, looking at Rwanda's public debt, the composition is largely external to domestic. But now, even as we saw on the presentation, we are having increased contributions from pensions. We are having also increased contributions to other saving vehicles in the financial sector, such as unit trusts, collective investment schemes. And if we looked at budget for the fiscal year, then the ratio of domestic borrowing was still remaining largely unchanged, and yet we are seeing a larger injection of capital. And as much as some of the players would want to diversify away from only government debt, but our question will be, could we see a bit more uptake of local currency domestic debt, so as also to avoid some of these players parking a lot of cash, waiting for opportunities when the ratio of domestic debt really to external debt hasn't changed. Thank you.
All right. Thank you. We'll take those ones, Governor.
Thank you for the questions. On the question of the correlation between depreciation and inflation, as well as increase on import prices on GDP, I will ask our chief economist to comment on it. On the external debt and domestic borrowing issuance, I don't see Minekofin here, but I will respond it and then probably ask the CEO of Rwanda Stock Exchange what they have in the pipeline that can also be investment avenues.
Thank you. Thank you, Governor, and thank you for the question. So there are a few things that involve the relationship between exchange rate, import price, inflation, and then GDP and imports. What we found in our analysis and our research is that, yes, of course, when the exchange rate depreciates, then import prices also goes up. It's because import prices are made of the price of these goods in the international market and the price on the domestic market. So you need to convert the US dollar equivalents to the Rwandan franc. That being said, we still have in our basket a relatively low share of imports, which is around 20%. Means that Rwandans consume 80% of the goods locally. This minimizes, in a way, the impact that exchange rate would have on the domestic prices. So what we see is, yes, there's an impact on the import prices, but at the end of the day, for domestic inflation, the impact is limited and it takes time. There's a lag between the moment when exchange rate depreciates and the moment when our domestic inflation is affected. And again, the impact is not one-on-one. Actually, it is much less. It is limited by the share of import in the CPI basket. That's one. On the side of real GDP, I think maybe in your analysis you can check if you're using real variables or nominal variables, because what one might expect and what is proven is that when real GDP increases, the demand, the overall domestic demand increases. Means that both domestic production is up, but also the demand for imports is up. So there's a link between the volume of imports and our domestic activity, because as let's say our GDP is driven by things like construction, then some of the materials are not produced locally. So the demand for imports increase. But I doubt there's a link between the GDP in real terms and the actual import prices. So it's more on the import volume side. This is what I can say. Thank you, Governor.
And on the question on external debt, one, it's true that the debt composition of government is mainly concessional loans at 80%, so which gives us really comfort on the sustainability of our debt, because this debt is repaid in very long term and also at conditional interest rates, generally below 2%. We've seen that through the fiscal consolidation, domestic borrowing by government has reduced. And that partly explains the large liquidity that we see in the banking sector. However, the government, also looking at market dynamics, has decided to increase its issuance of bonds on the domestic market rather than external financing. And I think that issuance plan is now available publicly, which will give more opportunities for investment for our financial sector. Secondly, we are also working with Capital Markets Authority and the Rwanda Stock Exchange on allowing a diversity in terms of bonds and looking at conditions at which we can allow also foreign currency bonds that can be issued on our market. And this is something that we are working on and hoping by the end of the year will be clear. And that is also another avenue of investments for our financial sector, but also the retail investors. I'll probably hand over to CEO Celesta for Rwanda Stock Exchange to also give an overview of other instruments that are available on the markets.
Thank you, Governor. I think what we are working on, you just touched on it. What is happening, we are seeing a lot of liquidity in the financial sector, especially in the banking sector. So that means the lending is not as much as it should be probably, but that is related to the risks probably or bankable projects. We see the same in the capital markets, but what we have in line we've been working on is to try to prepare companies and the projects to be investor ready. So that readiness, once they become, we have a project called the Capital Market Investment Clinic, which is really supporting companies, small and medium enterprises, startups, and so on, to get ready for investment. So investment could be lending or it could be equity. But what we are not seeing is an equity culture in our economy. So even for the private issuers, we have a resistance from institutional investors, mainly the banks. I understand prudential guidelines they go through, but I think we need the support for some of those institutions that go through the program successfully, maybe thinking outside the box to see how we can also develop an equity culture, because that one is very seriously lacking. Agriculture is not supported enough by the banking sector. So I think we should be looking at what we are looking at is alternative investments opportunities or rather avenues to support those sectors that are not being supported enough. I think that's what it is. It may be something I could precise here about what the governor just mentioned about what we are working on with the central bank is to allow hard currency denominated instruments to be utilized in our market. What it means is that soon, once it is cleared, we will have companies who are ready but eligible to be able to raise money in hard currency where possible. And also the investors, there will be eligibility criteria that it will be allowed in this market for people who have hard currency to be able to invest in our economy in hard currency. But of course, the mateja economy of Giri's, of course. Thank you.
Thank you. With your permission, Governor, could we get clarification on the published directive governing persons permitted to transact in foreign currencies and the requirements for authorization? The second one is maybe what we've been seeing around our city. Says, how is the financial sector prepared to support international visitors and leverage on the 2025 UCI Road World Championship in Rwanda for economic benefits? Yes, we have a question in the back.
My name is Abi Agina, working for CNBC Africa. Thank you so much, Governor, for inviting us for this important event. Just two quick questions. My first question is on green finance. As a country, Rwanda has been charting the path in terms of pushing for sustainability-linked funds. I'd like to know what is the game plan around green funds and locking green bonds, if you could address this matter. And my second question goes to the chief economist. I'd like to know, we're seeing the economy has sort of cooled down compared to what we saw last year. Perhaps talk to me about how does this impact the country going forward in regards to also what you're seeing on the global front. Right now, we do know that the global uncertainty has continued to impact both emerging economies as well as advanced economies. I just want to know how insulated is Rwanda's economy? What buffers have you put in place, even as we look forward towards seeing what happens next when it comes to the US Fed rate, as well as the issues around the tariffs? Thank you.
Thank you for the questions. So probably we'll start with the question on Forex, one directive on persons authorized to transact in foreign currency. As you recall, we issued a revised regulations on the use of foreign currency when transacting in Rwanda in May 2025, so 4 months ago. And yesterday also, after broad consultations, not only with policymakers, but also the private sector federation, we issued a directive explaining, one, the businesses of nature of activities which allow people and businesses in those sectors to be able to transact in foreign currency due to the nature of their businesses. And secondly, the approval process and authorization by the central bank for other people who are not in those categories that would have valid reasons for them to transact and receive foreign currency as payments. starting with the rationale why we had to revise the regulation on foreign exchange operations. It was after we conducted inspections, but also complaints from the general public, especially people who are renting, being commercial spaces or residential houses, and are asked by their landlords to pay in foreign currency, whereas the legal tender in Rwanda is the use of the Rwandan franc. And so we had to revise that regulation to make sure that we streamline the use of foreign currency in our country, but also avoid unnecessary demand for foreign currency while transacting in Rwanda. But we also are mindful of the fact that, one, our country has a liberalized accounts, meaning that people can have accounts in foreign currency, can transact and move funds from the country without any restrictions, as long as they respect the anti-money laundering and counter-finance terrorism regulations and laws and other due diligence, including tax regulations. And it was important that we addressed that issue, because in our inspection we had observed and found out that more than 700 contracts had been concluded in foreign currency from people who had no authorization. After consultations with private sector mainly, but also government institutions, including the Ministry of Trade and Industry, RDB, Ministry of Finance, but also the Rwanda Mining Board and Rwanda Finance, we issued a directive that gives clarity on who, as a person or business, is allowed to transact in foreign currency because of the nature of their business. One example is the tourism sector, which was already covered in the previous directive, but also looking at, for instance, the mining sector, where mining or minerals are priced internationally in foreign currency. But we also looked at, for instance, international school, but also our universities that are accommodating more and more and attracting international students. We looked at members of the Kigali International Financial Center, as well as members of the Kigali International Arbitration Center. So there's a wide array of sectors, due to the nature of their activities, that can and are allowed to transact in foreign currency under certain conditions. But the guiding principle is that no one residing or being a citizen of Rwanda should be forced or denied to pay in local currency. So we believe that these behavioral malpractices that we had seen in the market will be alleviated through the revised regulation and directive. We have also received some queries and concerns from foreign investors, and we had to clear the confusion that the liberalization of accounts is still maintained. There's no change to that, as per the investment codes, and the capital accounts is also liberalized under the conditions and the regulations that I mentioned. Also, the last thing is to make sure that people who in good faith actually had contracted in foreign currency without knowledge, we've given a transition period of 6 months to make sure that they can renegotiate their contracts. And this directive and regulation are followed out by an extensive awareness campaign and engagement with private sector, so that we monitor how implementation of this new regulation is being conducted, and be able to also adjust it if there are any sectors that we may have not seen or that will justify also be the authorization to transact in foreign currency. So in a nutshell, that's the clarification, and since the directive is new, I wanted to give that extensive explanation and clarifications. On the question on impact of UCI and how we are supporting international visitors, as well on the question on green finance, I will let our Deputy Governor Nick respond to that. And then there was another question for the Chief Economist on impact of global GDP slowdown. Deputy Governor.
Thank you, Governor. Now, let's appreciate that UCI championship happening in Rwanda on the continent for the first time is something very historic. But the financial sector is well prepared, I would say, to meet the needs of international guests and the participants. And I would say from three perspectives. One, in terms of readiness to serve and meet their financial needs. We have infrastructure to be able to accept international cards. We have digital payments that have been put in place. And as you've heard, we also have forexes that are able to meet the needs of the participants that are engaged in the world cycling. Two, as you saw from the governor's statement, the financial sector is also supporting the other sectors that complement these kind of events, be it hospitality, be it transport, either from financing their needs and also from insuring them. That's the other perspective that I would look at it. Third is also to appreciate that events such as this give an opportunity not only for the financial sector, but also for the country to showcase its readiness, to showcase its ability as a regional hub for finance, for investments, and for innovation. So all to say is that I do not see this as a one-off sporting event, as the cyclists are competing on our roads. It's an opportunity to demonstrate the resilience of the financial sector, the investments that are being done, and the robustness of the financial sector. That's the response I would provide. Now, coming to the question by CNBC Africa on green finance, we need to appreciate it from three perspectives. One, what policy initiatives are being done. Two, in terms of competencies, what are we doing? And three, in terms of products and services. Now, steps have been done. One, from policy, we now have a sustainable finance roadmap. You must have seen last week there was the launch of the green taxonomy. These are policy initiatives that need to be in place. There are also initiatives being done in building the competencies, because if you're going to attract green finance, you need to see that the mediators of capital have the competencies too. So this is an ongoing initiative in terms of building competencies, then come up with products and services to be able to attract that capital. We're already seeing sustainability-linked bonds, green bonds that are being issued on the capital market. We are seeing equity funds that are setting up, but there is much more that we expect and that is being done. In a nutshell, we need to have a policy framework. It's there, it's robust, but it's always work in progress. Two, we need to build competencies for those who are going to mediate that capital in terms of products and services. And a lot is being done, but there is much more to be expected. Thank you.
Governor, with your permission, we'll take two questions in the room and then we'll move on. We have a question from the minister.
Well, my question is on agriculture. I think we saw from the data that financing of agriculture is probably the lowest compared to other sectors. And yet we saw that agriculture has potential in terms of exports, agriculture and mining, which you stated. So we saw that there's a lot of domestic capital there and reduced lendings. So how do we, I think we need to have a dialogue to see how we can capitalize the financial flows into agriculture sector. We had a meeting here a couple of weeks ago with the financial institutions and and agri-exporters. So they raised a number of issues of access to finance. And when you talk to the banks, they tell you they have the liquidity. So we have to see how we can bridge that gap between the two. But the issues that came to the forefront included the risks that are related to the sector. But I know that our financial sector has moved tremendously in terms of putting safeguards in place, such as agriculture insurance. And we have gone into ensuring that we minimize the risks through irrigation, through agriculture insurance, and so on. There are guarantees for people going to agriculture, concession loans. So there are a number of instruments, I think, in place. But I think what's missing is being able to have that convergence. Governor, I was just want to end this. It's not really a question, but it's a concern that I'm raising that comes from the statistics. That maybe we need to meet the financial sector and those who are in agriculture and see how we can create a connection. Thank you.
Thank you, Honorable Minister.
Honorable Governor, my name is Felix Mundimana. I'm the CEO of Jali Finance and the chairperson of Non-Deposit Taking Financial Institution Association. My main question is about the revision of the electricity pricing that the government is considering. Given that our pilot role in the penetration of mainly electric motorcycles and e-mobility in general, we've been looking at electricity in a wide view that goes over the nice view that some countries have of being nice and contributing to the global issue. But in particularly for our country, we've seen some frauds that are coming up on one side, but we've always had the hope that the penetration of electricity in NABOT green solution could replace widely the import of petroleum products. Given the upward revision of the pricing of electricity, and the central bank concerned about the negative impact that can have on that hope that we had to both tackle the environmental issue, but also tackle the import-export trade balance. That's one main question. And the last kind request about the sector of non-deposit taking financial institution is that we inherited the reputation risk, given that most people are seeing us as the former practitioner of shark lending or bank Lambert. We heard that, and I would kindly request that narrative can be changed from the central bank, labeling us in other ways, not because they are institutions like mine and institution with a very nice background holds more than 90% of the total asset of the sector, but there are some other actors, but who came to report to the central bank. That means they are willing to do good in the future. So if that narrative can change from the central bank itself. Thank you so much.
Thank you so much.
Thank you for the very good questions. Starting with comments and requests from the Honorable Minister, Mark, Minister of Agriculture. I could not agree more. There needs to be more ways and more engagements to make sure that the financing of the agriculture sector increases. We were half happy that at least we see agriculture now coming in the top 10 sectors that are financed. But as we've seen, the financing is still less than 3% of the total outstanding loan portfolio. And so we would welcome that deeper engagements, not only with the banking sector, but also the insurance sector, to make sure that products that are developed for the agriculture sector, as well as risk mitigating schemes, especially through, for instance, the National Agriculture Insurance Scheme, can allow us as Rwanda to fund better the agriculture sector, which, as we know, contribute close to 25% to our GDP, but employs more than 70% of our population. So as central bank, we are ready to facilitate those conversations, but also to look at other instruments that would allow more financing to the agriculture sector. But I have also the chairman of the Rwanda Bankers Association in front of me. If he has any comments to make, that would be appreciated. Chairman.
Thank you, Governor, and thank you so much for the presentation. The Minister for Agriculture, thank you for the question, or the concern, not a question. I know we have had engagements at different fora targeted at arriving at a working mechanism to channel financial resources to agriculture. I think the challenge we still have, first of all, agriculture remaining very fragmented, channeling a lot of resources to agriculture continues to be a challenge. I know at the bank's level, the banks that I and my colleagues lead, many of us have agriculture units that look at potential projects to fund. There are obviously risks, just like with other sectors. We've attempted to look at both risk mitigation measures, but also the cost of funding compared to margins of the agriculture activities. And I know there's a lot of things we discussed with the ministry for different value chains. I think what needs to happen now is to consolidate all those into projects, bankable projects, at a level that can be scaled, but not just for the production sector only, but also value addition, because that's how the sector will make money. But we welcome, Honourable Minister, an opportunity with the bankers in the room to have a conversation on what can be done. We have ideas, and I think many of them we've discussed. Honourable Governor, I think given the 3% we've seen is a step in the right direction. I have all the confidence that if we bring these together, we should be able to continue to see more money going into agriculture sector using technology as well. Thank you, Governor.
So we'll continue with the question on electricity tariffs and what, as central bank, we see as probably risk to that, and that I will ask probably the chief economist to comment. Then the question on non-deposit taking financial institutions. First, I think we need to clarify, as central bank, we don't consider the sector as former Banque Lambert. This is a regulated subsector, and we are happy to see that close to 80 non-deposit taking financial institutions, especially lending companies, have been licensed. But I do agree that there has to be more awareness of exactly what the sector is bringing, because it responds to the needs of clients and consumers, that are clients of these non-deposit taking financial institution, one for short-term loans, but also for the quick turnaround on these loans. So it's a subsector that's growing. The regulation is 3-year-old, and we are revising it to make sure that we can strengthen your sector. And we really welcome and appreciate the association that has been put in place so that we can engage more directly and address the concerns of the non-deposit taking financial institution. So rest assured that we are very committed to supporting the sector and making sure that it continues to grow. And one concern that we had, but we have come to an understanding, is where some of the institutions, when they come to apply for licenses with very high interest rates on their products, which we've really signified our concern on that and making sure that as much as we want those short-term loans and the quick turnaround, that it doesn't come at a cost that's unaffordable for the consumers and Rwandan citizens. But rest assured, and I see your regulator, our acting ED for Financial Sector Development and Market Conduct, is here as well to make sure that you can engage him regularly for any concerns. But myself and the Deputy Governor are also available to address your concerns. But this is a sector that we really see is growing. And as I mentioned in my presentation, also contributing to underserved sectors, financing, including agriculture, where we've seen that it's in the top 5 of sectors that you're financing. Probably I'll go to the question on the pension sector. True, the large contribution that we see gives confidence. One, responding to the need to first have a sustainable public pension fund, and looking also at the, I would say, increase in life expectancy, which is really good. And so the projections are that as people live longer, they will also benefit from their pension savings for a longer period. It's something to celebrate as a country, but also making sure that people who retire can do so in dignity and make sure that the savings and the benefits that they receive allow them to maintain a decent lifestyle. These long-term savings, unfortunately, we've had a lot of questions around whether people can be allowed to actually tap into their savings even before they get to retirement age. Secondly, it's also a conversation even in advanced economies. Can I use the savings that I have as collateral to get a loan? But we have to be very cautious and careful about using such long-term savings that are done to make sure that once we retire and we no longer have, that we don't have, at a time where we don't have income because we are no longer employed, that then a fraction of those savings have actually gone into loans, or if for any unfortunate reason the person is not able to reimburse their loans, what that means is the savings that they had accumulated for their pension is actually reduced. And so these are really some of the factors that make central banks and financial regulators be very reluctant to allow people to use their pension benefits as collateral. However, as we save towards our pension, there are also other investments that can be made, long-term investment and saving products that can be considered as probably collateral. And I think as we see our market developing and offering more of those investment products, then that could be an answer to the question you raised on how people can use their saving instruments to go towards some of the loans they have. But for now, it would really be, I think, not a prudent way to manage savings that would go to retirement.
Yes, on the question related to electricity tariff and the links with transport and green transport, I understand also the link and the concern and the interest from the chairperson of non-deposit taking financial institutions, given the interest they have in the sector and electric motorbikes. But what I can say is, one, you've seen probably that yesterday Rura announced new tariff for electricity, and probably if it's not already the case, there'll be more engagement and communication by the respective ministries about the reasons for this change. What I can note is that this electricity tariff has been stable for a very long period of time, actually for a period even before the COVID-19 pandemic. The reasons for this revision will be explained more in detail, but it has to do with the increasing the capacity of the government to generate more electricity in the future and be able to sustain and satisfy the demand as our economy is growing. As you know, access to electricity went all the way up to 85% in 2025 for Rwandan households, and it was much, much lower 25 years ago, and in some cases around 10, 12%. So what is the impact? The first thing is we have incorporated these numbers in our forecast, and what is being presented today, 7.1% inflation for 2025 already has this revision in electricity tariff within it, within its assumptions. What it means is that our inflation is expected to remain within the band, including these changes. That's the main thing. Second, regarding imports, there are other policies that are in place, including tax exemptions for electric vehicles, full electric vehicles, that has also fast-tracked them or increased the appetite or the demand for these electric vehicles, electric motorcycles, or electric cars. These are still there, which is giving an advantage to importing electric vehicles versus those who are using traditional fuel, traditional fuel. We've seen continuous increase in electric vehicles importation, and the use of these electric vehicles in our transport system is actually leading to lower demand, or at least reducing the increase at which the demand for fuel is growing in the country. What it means is that the impact that you are referring to, meaning we use more green transport and we are having less imports, or let's say a lower growth in the imports of fuel, this is a trend that we expect to see continuing because of these tax exemptions that are there, but also the advantage or the difference between the consumption, everyday consumption when you use fuel versus when you use electricity, even with the new tariff. So I don't think there will be a major impact there. So in a nutshell, what I can say is that yes, the electricity tariff have been increased for reasons that are justified, and the impact on inflation will be contained. We'll still have inflation within the band, and the positive impact it has on imports through reducing the demand for fuel will continue. Thank you.
All right, thank you, everyone. I know we have many questions, and I keep seeing them coming in online. But I think for now, I would like to request you to allow me to ask our panel and also applaud our panel for this interactive session and as they take their seats. Thank you, Governor. Thank you, Deputy Governor. And thank you to the Chief Economist.